So we actually, Alito owns Exxon, and so this is a company that we really like. They're both great companies, Dom, but we think Exxon has a little bit of an edge in a few areas. This is a company that has just been able to pay a great dividend, has a great history of beating earnings and guiding well, and so from our perspective, Exxon is still doing the work, and a company that will continue to participate.
All right, Exxon the pick there. Next up, you've got two of the biggest automakers on deck. We're talking General Motors before the bell on Tuesday, followed by Ford after the closing bell on Wednesday. After a monster 2021, both stocks have suffered big this year, down roughly 40+%. So what's the play here, GM or Ford?
So we're going with Ford. So Ford is a company that's been suffering from some supply chain issues, as everybody knows. It definitely hurt them last earnings. However, if you look at what is going on within Ford, demand is still very strong, and so assuming the supply chain issues eventually work themselves through, there's also the potential that as the shift mixes, as the mix shifts from traditional Ford cars and trucks to electric cars and trucks, particularly the F-150, the company continues to get profitable, which is sort of the name of the game right now. As markets get tough, so you have good demand, good profitability. We think Ford is a good buy.
All right, so Ford the pick there. And finally, let's get to the consumer-focused names. We've got big ones, both in staples and discretionary reporting. You've got McDonald's, Coca-Cola, Colgate-Palmolive. Colgate, as you can kind of see, they're taking it on the chin, falling 16%, while the other two are both down roughly 5% or so roughly this year. So on the consumer-facing side of things, Gina, the picks.
So Alito owns both McDonald's and Coca-Cola. These are companies right now. The consumer space is going to get hit, Don. So, Dom, you know that we very likely are already in recession, and you're starting to see that already in the earnings expectations built into both McDonald's and Coca-Cola. But McDonald's is a company that has a tremendous profit margin, and profit margins matter when you're still faced with struggling with inflation, and it's a very inexpensive priced item. The lineup is inexpensive, and it defends very well. So even though we're looking at a downturn, we still see support for McDonald's stock. Coca-Cola, same story, but throw in there also a good dividend, right? And so Coca-Cola is a company that is also expected to feel it in earnings, along with the rest of the consumer space. But this is a stock that people continue to demand. And so we see these as defensive consumer exposure.
All right, so we got the stock picks there. I want to follow up one more with a wild card here, Gina. I'd like to know in your mind whether or not you think buying 10-year Treasury notes yielding 4.25% or more is a good buy at this point.
So interesting. I mean, I think it definitely is. The yield right now is quite attractive, and so where do we go from here? There's the argument that once you start to see the seasonal adjustments start to drop off in the labor markets, that the data will start to look slightly weaker than they have been looking, and it could open the Fed up to potentially take a breather. And if that happens, then yes, I would say absolutely that could be, we could start to see the topping of the current markets. However, if the Fed keeps the pedal to the metal, then all bets are off in the Treasury market.
I guess it all depends on the data coming forward. Gina Sanchez, thank you very much. We appreciate it.